Hi there, Andrew Thompson from Precision Market Trading. We have a few markets to cover in this video this weekend. This first one is Worley. They're a mining services company, been hammered all the way from $52 down to recently $8.50 odd. We did some trading around here earlier, start of the year. We made some good money through here. We got out there because it wasn't acting like it wanted to keep going. So my price and time I got around this first low, held it for quite a few months, but we've come back down to a double bottom. We all know how much I like double bottoms, double tops, and the midpoint in between. But this is a weekly chart, and first we start back in the post GFC low where this got smashed badly, 52, like I said, down to $10, which that low has recently been broken. But anyway, the reaction range up from that post GFC low to the reaction top was $8.58. Now, you may or may not be aware that this week's low was $8.57. So you know I like the numbers coming out as equals. This range $8.58, this first low was $8.52, and now I have $8.57. So this number for me is giving me this low. From this post GFC low to the first of the double bottom lows was 1554 trade, and down from the top to the recent low was 51 degrees. Keep an eye on this number. My next stock after this one is going to be a Luca, and I'm going to show you something that's matching up with this. All the markets run quite often to the same piper, so keep an eye on 1554 and 1551. It's coming up in the next one. The first top after the reaction low, the GFC low, to the recent low was 1469 traders, okay? And the average to the midpoint down here was 1467. So that's when I say the average midpoint, I mean you get the calendars, the count of the calendars and the count of the degrees, and you divide them by 2, and I find quite often it comes out a number. So basically I've got 2 points apart here, yeah? And from the major low to the very recent low this week, 2,444 calendars, which is 17 times 144. I've gone on enough about that. Next chart is going to be focusing on the daily, so I'll get a bit closer. So here we have the top back around $32, $33, going into the recent double bottom, 852 like I mentioned, and this week's 857. Now I mentioned 467 and 468, 1467 and 1468 in the previous weekly chart. Well, here we have the range top to top before we went into the finals low of $14.64. So once again, the numbers are all coming out. So that's why when I start getting the same number around here and around here, I take notice. And I've gone on quite a bit in my all odds tutorials around the number 777, 778, 779, and it's the 50% of that 387 to 389 comes out a lot, especially in the futures and the all odds. Well, here I have 778 traders going into the midpoint, and down here from the low after the big crash in Worley there to the midpoint with 396 calendars and 390 degrees, and from the reaction top into this week's low with 396 calendars and 389 degrees. So it's the same. So for me, this low is looking pretty good. And our old favourite, 464, 466, which as you know is 2 times 233. We've had quite a bit of that coming up the last few weeks. So for me, Worley is a buy here. So double bottom, midpoint is shaping up as a time pressure point. And if the midpoint shapes up as a pressure point, it makes the right-hand side low look a lot better. So I'm looking to buy around here. Next we go on to Orica. So Orica has had a nasty old plunge on Friday, got smashed. New CEOs come in. It's time to bring all the bad news out very early, blame it on previous management as they do. So basically he's looking at the only way his stock can go now is up. He gets all the bad news out in the market and it's looking good for him. So we have to have a look at this. Now this is just I wouldn't say a punt, it's just an observation of mine. I mentioned in the last chart on Worley, 1554, 1551. This low down here is 1555. I mentioned in my Fortescue video the 161 low, how the 161s come up all the time, and the same in other markets. So 1550s are working out nicely. And you will remember just previously, I went to 778 trade. Yep, on the Worley chart. Well, 778 times 2 is 1556. So like I said, so basically this price is 2 times the 77 strong number I've mentioned many times. So I like it. And I put a couple of things here just to prove out the accuracy of numbers working this way. I was looking to short Orica around here. I got my numbers wrong. I didn't get placed, so I didn't lose any money. But that was my top, and it went a little bit higher. Then it collapsed, so I was a couple of weeks early. But I had to have a look why it went to that top, because that's how you learn from your mistakes going forward. We had this top here, all the way back here at $26, $27. To that top, the difference between the two tops was $4.86, and from this low was $4.81. Now you may remember I did a chart recently on the All Odds and how it was always going 491, 486, 484, all the ranges down were all around the same number, because we know that the All Odds went down in 491 days in the great crash during the GFC. So these numbers work. So I wanted to bring these numbers, 486 and 481, to show you how this top came in, because here we have this range up was $7.38. And from this low to the recent low, the average in time between calendars and degrees is 7:39. So this is why I think this could be a buy around here, and it could be a decent buy. There's good time and price coming up. So once again, we'll monitor that. Last but not least, I've got the SPI futures, ASX SPI futures. For me, the market made a low on Friday, at the very worst tomorrow morning, Monday morning. For me, the market is overdone. If you step back and look at the forest rather than the trees, you'll see higher lows, you know. There's a bit of a drama, all this bank drama going on, but I'm just seeing higher lows. I'm seeing base building. I'm seeing a market that still, for me, might want to attack the old tops. So we start looking at a bit of history going forward. So we had the top before the great crash, 2007, over to this top, 1,442 points. I've talked many times about 1440 this and 1440 that. The low in CIMIC, $14.40. This is why I harp on about it. 10 times 1 in 44 brought in that top. The monthly going back to 2003 was 144 months on that top. So it works and it works and it works. And also, I've also talked about looking at futures prices from years ago, being ranges now, because the market has matured, so the tops and bottoms are now ranges and time. And we look at this low between the double top we had back in 2010, 1,858 days to this low. 1855, I've mentioned before, was the 1989 top before the crash in 1989 after the 87 top. And across here, we got bars, 1868 bars, same thing, 10 points out in that period of time, I'm not worried about. 1459, 1438, close to my 1442. So from this low, that big low we had this weekend 4 years ago, remember this is the 4-year anniversary of that big spike down we had 4 years ago in 2011. It's 1,438 degrees, yeah, 2 degrees off 1440. I hope you get the picture here. And happy days here, from this low to this low, it's 773. There's your 777 again. So for me, Worley, definitely a low. Orica, worth having a look at. The All Odds and the SPI, low on Friday, if not early Monday morning. So we'll see how we go. We'll keep you posted. Goodbye.